Hey everyone, welcome back to Corporate Decoder, the place where we try to make sense of corporate mumbo jumbo. Today we're diving into a Form 8K filing that's making waves. Let's just say after reading this, you might want to think twice before investing your hard-earned cash. Today we're taking a look at Trump Media and Technology Group's latest filing. Basically, this Form 8K means the company is sharing some important information with the public. Specifically, they issued a press release, and this filing makes that press release official by sharing it with the Securities and Exchange Commission, also known as the SEC. The key here is the press release. We need to figure out what this announcement says and what it means for the company and its investors. It's like the company is shouting from the rooftops and we're here to translate. Now, this part is crucial. The information in this report, including the press release, isn't officially filed in the same way as some other documents. That might sound confusing, but it basically means the company has a bit less legal responsibility for what's in it compared to, say, their official quarterly or yearly reports. This also means it will not automatically be included in other reports. Before we dive into the details, there's something very important to understand: forward-looking statements. Basically, the company is saying that anything that might happen in the future is just an educated guess. They're not promising anything. They're using words like believes, estimates, and expects, but they're also saying that things could change drastically. It's like when a weather forecast says there's a chance of rain. They might be right, but they might be wrong. These forward-looking statements are subject to many risks, uncertainties, and assumptions. The company is covering itself, warning everyone that the future is unpredictable and their optimism might not match reality. This legal jargon here is a safety net for the company. This act gives companies some protection from lawsuits if their forward-looking statements don't come true, as long as they provide enough warnings, which is what they're doing here. It's like saying, we're telling you this might happen, but don't sue us if it doesn't. The company lists a whole bunch of things that could go wrong. They are saying here that they might not be able to keep users interested or actually make money. They even worry about cyber attacks that steal data, new products taking too much time and money away from the core business, and other general business and economic risks. If you really want to dig deep, the company suggests checking out their annual report, something called a 10K. Also, make sure to check out their other filings with the SEC. This is where you can find more details about the specific risks the company faces. You can find all these documents on the SEC's website. This is like the company saying, here's a map to all our potential problems. Now we get to the end of the filing and we see that they are attaching exhibits, including the press release itself, to the report. The exhibit is labeled 99.1. So the most important takeaway from this Form 8K is the press release attached as Exhibit 99.1, released on February 21st, 2025. It's the core of the announcement. The company is providing information they deem important enough to share with investors. Now, let's pretend we have a look at that press release too. This is where we would see specifics such as major company announcements, maybe some new partnership, maybe something bad happened to the company. We'd examine if it's genuinely good news or just hype to boost the stock, or if they are trying to distract from negative stuff happening somewhere else. We'd also want to check if the press release's claims line up with what the company has said in other filings, or if it seems like they are changing the story. So, having taken into account their business strategies, risks, and future collaborations they may have, what's our take on Trump Media and Technology Group? First, while the company is attempting to explore new markets such as Truth.fi, it may face significant struggles in achieving profitability, as suggested by their own risk disclosures. A failure to grow the user base or effectively compete in the market could seriously harm their financial results. The company also faces considerable risks due to the market it is operating in. Political divides could make them vulnerable to boycotts. Changes to regulations or user preferences or unforeseen economic changes could also change how good or bad the outlook is for the company. Given these uncertainties, valuing the company is very difficult. While some investors might be drawn to the brand, the risks are significant. A conservative estimate focusing on current financials and growth potentials would put the stock price in the range of $10 to $15. This assumes moderate success in their expansion plans, but acknowledges the very real risks of their business. All things considered, I'm leaning bearish. The company's dependence on brand sentiment and its struggle for profitability mean it's a risky investment. Thanks for watching this episode of Corporate Decoder. If you liked this and want to see more, hit subscribe.